Okay, candlestick, one of my favorite in technical analysis. So let's start with the candlestick chart pattern. This candlestick chart pattern is also called as the Japanese candlestick chart because obviously it was developed in Japan during the 18th century by Muneshima Homa, and he was actually a rice trader of the financial instruments. So basically this candlestick chart pattern is actually a kind of a financial chart which is used to describe the price movement of security, derivative or currencies. In our case, we are going to use this chart pattern for the cryptocurrencies analysis. I mean, a typical candlestick chart pattern shows for one day, 1 month, or you can even see for like years. Okay, there are a couple of things that we'll be seeing. If you want to go for a short-term trading, then you can also see for like kind of a day trading or something. You can also see a chart pattern for like 30 minutes or 1 hour. 1 hour is the preferred one, which I would say if you are going for the daily trading. So coming back to the understanding of the chart, this candlestick chart pattern, uh, these are often used in stock analysis along with the other analytics tools such as Fibonacci analysis. So basically, if you just know the candlestick chart pattern, it's just not enough. You have to mix it with a different analysis in order to understand. There are a couple of other graph as well, like you have a line chart, you have a bar. But in the financial terms, using a candlestick is much more efficient. It's very easy to have the understanding of what is going because of the colors. It has basically two colors, like the green one for the bullish candlestick, and for the red one for the and the red one for the bearish candlestick. And let's go and see how understand these bullish and the bearish candlestick. Okay, so as I was saying, there are two different kinds of chart pattern: the candlestick chart pattern, the bullish one, and the bearish candlestick chart pattern. So if you see in both of the chart patterns, there is this strong rectangle, and then you have a thin lines over here on the top and the bottom, so these rectangle shapes, okay, these things, they are called the real body, or you can simply call it as a body. And these thin lines, they are actually called the shadows, or you can even tell it as wick or tails, whatever you feel comfortable with. So if there is one another notice that you might be seeing, that this is a green color chart and this is a pink or the red color chart. Usually it's a red color chart. So with the green one, it denotes that obviously it's a bullish curve. That means that's the price is increasing. It's doing great. And if it's a bearish candlestick, it's decreasing. The price is decreasing. The bottom of the candlestick is always called, like, the bottom of the tail of the candlestick is always the low, and the top one is always the high. Now here is the difference between both of them. The close and the open actually changes in both of the conditions. How does it happen? Let's see. Let's start with the bullish candlestick. So for example, let's say the time is something like 10:10, and we are seeing the candlestick for 10 minutes. It's a 10 minutes candlestick. Let's say that's this for an example. With 10 minutes candlestick, I mean that at 10:10 we observed at what price the market was. Let's say the market was at 3,400. So that's the open price. Now, what was the price at 10:20? Obviously, we are going to see the price at the end. So let's say at 10:20 the price was 3450. So obviously if you see, we have increased, the price has increased for 34 from 3400 to 3450. So it's a bullish candlestick, like it's a bullish market, right? Because the price is increasing. So in that particular case, we will draw this candlestick. This is the open. The open is supposed to be 3400. The close is supposed to be 3450. Now you guys might be wondering what these shadows are, right? So these are the fluctuations that happen in the middle of 1010 to 1020. Let's say at 1012 the price might have fallen from 3400 to, let's say, 3350, right? The price fell by 50 marks in, let's say, 5 minutes or 3 minutes. So that was the low, but after that it recovered, and somehow there was a point it also gained till 3475. So that was a high point, but then it again started decreasing and it stabilized at 3450. So that is the place where our market closed. But if you see, there was a whole different fluctuations between 3350, that was the down point of the market, and 3475, that was the up point of the market, right? So these fluctuations are denoted as the shadows. Okay, these shadows can be long and small. We'll see some of the examples. One of the example of the recent Bitcoin candlestick, for using the recent Bitcoin candlestick pattern. But before, let's go understand the bearish candlestick as well. So in the bearish candlestick is quite the same as well. Again, it's again the open is here and the close is here. The only difference is it counts for the decreasing price. So let's say your price was 3400 again. Let's say they take the example 3400, right? That was the open market price at 1010. At 1012 the price decreased till let's say 3300. So that was the lowest price. Then it started recovering, let's say 3320, 3333, something like that. And maybe it also fluctuated like 3310, 12, in between that. But finally it managed to close at 3350. So that is the market close. Okay, now in that process there might be a single minute in which the price from 3400 reached to 3410 or whatever the high. So that was the high market that formed the shadows. So these lanes are also very important, like this show you the fluctuations of the market, and these are again the fluctuations. These are the real body. This is the open market and this is the closed market of the candlestick. So whenever you see a red color, that means the market is going down, and that's very easy to understand. You see the open market, what price the market was open, what price the market got closed, what was the low value, what is the high value. Based on these candlestick pattern, we are going to implement a lot of other charts, like I said, like the Fibonacci chart curve or some other analysis, or the moving average, or I don't know. I mean, we are going to see like different analysis pattern onto this candlestick chart. So personally, I prefer to view the stock market and everything onto the candlestick, and it's very easy to understand. Now let's go and have a look at the example. Okay, so I have taken a very recent example. If you see, like, it's from the 7th of March. Okay, so I guess you guys might be aware that these big red lines are the drop, right? And these green lines are the increasing. That's a bearish market. This is the bullish market. Okay, and yeah, fine. So we'll see. So basically these snapshot, I have taken it from the tradingview.com. That's the best platform for doing a technical analysis of various stocks. It's not just a Bitcoin or any other cryptocurrency. You can do a technical analysis of many stocks and many things over here. Now coming back to what we were looking at. So again, let's start observing from this particular point. I see a big bearish market here, right? So these market, what you see, this is a day. After every day, let's say it's 14th of Feb, it's 15th, and blah blah blah, and then it goes increasing. Okay, so it's a day market. So that means in one day the price was the market is started at 66,250, right? And then for a brief moment it increased, let's say 6,300, but by the time it was closing in the day, it actually decreased till, let's say, somewhere between 5,700. Let's call it like I don't know, 5,600, 56.25. It looks like in the middle. So the market closed at 56.25, but there was a point that even it reached till this bottom. This was, let's say, 5,300, and then it recovered, and then the market closed here, and then another day again the market was going down. Okay, for a brief moment it even went below 5,250. That's around 5,200, I would say. Next moment it was again decreasing. It was a very small change over here in this particular day. Then there is a brief small opening of the market, but again there was a big decreasing in the market, like a big fall. So the bears were playing their particular role, and the price actually closed at around 4,700. Again there was a big dip. Okay, there was a recovery, and this went on. So you see, like, the market is decreasing. One piece of advice, guys: never play anything, never put your money onto the decreasing price strategies. Okay, it's very harmful for you because you are putting your real money, and these patterns are very dangerous to put your money on. There's more chance of losing than chance of gaining any money. So particularly me, I would not spend any money on these patterns if I see these patterns. Anyway, so over here the price was very low, like it almost got between 3,100. Then there was a bullish market curve. Okay, it started increasing, and then somehow, if you see, like, the market is going up and down, there's a lot of bullish curves. Obviously it was because of to neutralize this bearish, I would say this is very unpredicted bearish curve over here. Okay, but obviously we cannot predict until unless we see other charts as well how it is doing. So technically I would say, yeah, okay, so this is, guys, all from the candlestick. I hope you guys have understood this part. This is basically just to view what is the top, what is the bottom, and how you're going to analyze. Obviously we have to implement a lot of other analysis tools over here in order to understand and in order to predict what the market is going to do. But that's all from here. Thank you, guys.